So I'm going to go ahead and get started. Hoping everyone's having a great day so far. I believe it's Wednesday, so having a good start myself, super busy day. So yeah, today we're going to be talking about how digital payments are being used in real estate. A little bit of background about myself. So I'm Jonas. I'm the CEO and co-founder of a company called Glacier Flow. We build real estate payments technology, essentially trying to make the real estate transaction more simple, fast, and secure using digital payments in real estate. My background prior to working with Glacier was in the commercial real estate industry. I did that for about 3 years myself, mostly in the LA area, and mostly just as an agent doing lease transactions and sale transactions. And then more recently, I moved into building payments tech for the real estate space that's more focused on the title and escrow industry. Really, we just saw that there was an opportunity here to start digitizing payments in real estate because of some problems that existed that I noticed when I was an agent, as well as just my research sessions with title and escrow people. And so that's where a lot of this inspiration comes from to put together this webinar to start educating people on how these digital payments can get used. So to get started, I kind of want to talk about how payments kind of work today in the industry. So most money in real estate flows through wires and checks, and they do come with kind of their own subsets of problems. But the reasons that we use them mostly are because they are what we understand and what we know. Similar to how you could use a debit card or Apple Pay today for your personal consuming of goods or purchasing of goods. It's super just like it's one of those things in your mind that you don't even think about, like this is the way that I pay for things. And so in real estate, wires and checks function very similarly. But they do come with their inconveniences. So in terms of wires, they do charge somewhere between about $25 to $45 for inbound and outbound fees. So that means that the sender of a wire is paying, let's say 25 to 45 bucks. And then the person that receives that is also paying that same fee. They are susceptible to fraud. Some statistics from the NAR, in 2021 alone, about $6.9 billion were lost to wire fraud, and about 2,300 people made claims of wire fraud in the US. So it really just has to do with the nature of the transaction and how it's a push transaction. Essentially what that means is that when you send that money, you can't get it back. And that opens the door for a lot of phishing scams for people to try and divert funds the wrong way. Another thing about wires is that they can be pretty inconvenient. Some banks still don't have the ability to send wires from an online portal, so you'll have to visit a physical bank branch. Another time, sometimes your wire limits just aren't as high as they need to be to make a transaction, so you'll either have to go into the bank branch or call in to initiate those wires. When it comes to checks, there's a couple different forms of checks that exist today. Some are like personal checks, and the other form is cashier's checks. In general, they function similarly in the way that they're deposited. Cashier's checks are essentially just treated like cash because they've already been withdrawn from your account. But either way, the drawbacks of them is that they're pretty slow. For one, they have to be either handwritten or you have to go to the bank to physically get them, which is also part of the inconvenience problem. But also just trying to find something that's physical like that in, let's say, a real estate transaction. Let's say you're moving houses, like where's my checkbook? It's just one of those things that's really slow and inconvenient that holds people back. And so looking at other ways that we can make payments in real estate, there's 4 that we've really identified here that are pretty common. One of them is cash. You don't see this very often. I'm sure back in the day when there was no other options, cash was king, but in these days it looks very sketchy. The only people that are really doing, cash deals are people that are, potentially money laundering, or they're kind of like in the marijuana business. I saw this in commercial real estate, and also talking to a lot of title escrow people. They want to use cash because, it's harder to regulate. That's why it's not really used in real estate very frequently. Crypto is something that's been up and coming and talked about a lot in the real estate space, but it still has issues that surround it. One of those is exchange fees. At the end of the day, crypto comes down to accessibility and people being able to transact with it very easily and having people that can accept that form of payment. And since a lot of people still don't have that infrastructure to accept crypto, it has to be exchanged back into whatever currency your country is using. So if it's USD or just the dollar, you have to pay those expensive exchange fees to convert your crypto back into US dollar. And it's also extremely volatile. A lot of people are still treating it like an investment and less like a currency. And so with that, prices are fluctuating. And so, you may sell your house for $400,000 in Bitcoin, and then the next day your crypto is only worth $350,000. And now you've lost $50,000 on what was supposed to be a very solid asset. So crypto is still struggling to kind of move into the real estate space. And then that kind of leads us to ACH and RTP. These are two forms of technologies that are trying to be introduced to real estate, but some things that have held them back. For one is that ACH is very perceived to be slow. There are faster ways to send ACH, but traditionally when it first came out, it took about 3 to 5 days to move money over ACH. And then it also has this ability to be reversed. So, when I was talking about wires, there was kind of like when you send it, you could never get it back. With ACHs, you can technically call them back, just the way that they've been built. And so that kind of causes some cause for concern in real estate because people want that payment to be made sure that that's actually going to stay where they send it. In terms of RTP, I can probably guarantee most of the people that are on this call have either never heard of it, or if they have, they don't know too much about it. And so really it just lacks knowledge and applicability to the industry right now in terms of just people knowing how to use it for real estate. And so we're going to talk a little bit more about ACH and RTP and how they can be used. So to give a little bit more background about what ACH is, since a lot of people don't actually know like what the technicalities of ACH are. It stands for Automated Clearinghouse. It's operated by an entity called the National Automated Clearinghouse Association. Mostly people just call it NACA or NACHA, however you want to pronounce it. It's been around for a really long time, since the 70s, so it's about 20 or 50 years. And you use it to pay, things very common in your life, your utilities, when you're paying off your electricity bill, you're paying somebody over the internet that's not a credit card, even your direct deposit, most of that flows through the ACH network. And it's available only domestically here in the US. In terms of RTP, a little bit of background, RTP stands for real-time payments. It's operated by a private entity called the Clearinghouse. And there is going to be a launch of something federally called FedNow that should be coming out in around summer of 2023. This launched very recently in the US in only 2017, but different types of RTP have been used in different countries since about the 70s, starting in Japan. And then also in the early 2000s by a lot of European countries like the UK. It's not Zelle, but it is like an instant transfer. So think about how when you send money on Zelle, that money arrives instantly in your account. RTP functions the same way, but it's using a different type of payment rail. So, thinking about it like that is just how fast RTP can be. And it's also a domestic product. Every country has its own form of RTP. So kind of stacking these different payment methods up against each other. We don't have to go into all of this, but there's a few points here to highlight. One of them is this third line here about how wires and ACH and RTP compare in terms of how fast those funds are available and when you can send them. So in terms of wires and ACH, they can only be sent on business days. And one of, I think, the very cool like opportunities that exist with RTPs, you can send them 24/7, 365, which means that they're not subject to business days. They're not subject to holidays. You can send them essentially whenever you want, and they're going to arrive. And so if you're ever in a time sensitive transaction or people just really want to get their money faster, this is a way to actually get that done, which the other payment methods just don't have that ability to do. And I just think that's very cool. In terms of the availability of the funds, wires and ACHs both have these things called clearing windows. ACHs can take about 1 to 3 days to send. Wires are typically within a 24-hour time frame. You'll see those funds. And like I said, with RTP, you should see those funds real time from when somebody sends their money. It should be there in a matter of seconds. RTP and wires are irrevocable transactions. Like I said, they are push credit transactions. So that's what makes them essentially irrevocable here. And then for ACHs, they are revocable. So there is a process that, the people that have designed ACH have created for people to call back funds. And the last thing here that I did want to go over is that there are limits associated with wires, ACHs, and RTPs. Wires technically have no limit. It's kind of set by the banks. And so, with the banks, typically for personal or individuals, you'll see limits between, $10,000 to $50,000 that'll be set on your account. So for most real estate transactions, you'll have to call in or physically go into a bank branch to set those limits a little bit higher. In terms of ACH and RTP, very recently, these limits have been set up to about $1 million, which was about April of 2022. And so these limits are pretty much what the top area is, but your bank could also potentially limit those, or whatever processor that is, issuing the ACH or RTP for your transactions. So going forward here, we just kind of want to talk about how these two ACH and RTP payments can actually be used in real estate. So at a very high level, a lot of transactions that are being used on the ACH network and in real estate are for earnest money deposits. So for those of you who don't know exactly what an earnest money deposit is, it's essentially the money that a buyer deposits into some form of a settlement, title, or escrow account. Or even in some states, it could be the listing brokerage, some form of a trust account that's holding the money on behalf of the buyer in the event that something happens in a real estate transaction, and then that money gets used to, compensate for damages or anything like that. It's kind of like a security deposit, but for a real estate transaction. And this payment is typically facilitated through wires and checks, just like most other real estate payments. But there's a lot of application here to essentially move this money through ACH, because this is a transaction that's highly targeted for fraud. Because you're usually sending, 1% to 2% of the purchase price for this earnest money deposit, a lot of fraudsters kind of want to get a piece of this because it's not as guarded by the people that are involved in this transaction as maybe seller proceeds or other higher volume payment or transaction amount type of payments in the real estate transaction. And so EMDs get targeted. And so a lot of companies, like third-party systems like us, have decided to create essentially non-reversible ACH technology, where we pull money from the buyer, push it into the escrow trust account, and it can arrive there in 0 to 2 business days without any exposure to, or exposure of people's account and routing numbers, so they can't divert funds in different ways. And so these digital payment flows have really started to help move earnest money over the ACH network in a way that wires really couldn't, without, basically putting people more susceptible to fraud. And so to kind of see how this works from an interface, because I know that diagram probably doesn't tell the full story, you can kind of see in an interface that an escrow person would be able to just enter an amount that they want to request, enter in who they want to receive money from, and then essentially be able to select the destination account that they want the money to go into, if there's a due date that's associated with that earnest money deposit to where they can send those funds. And then they can just go ahead and review that and submit it off, and that'll create a request for payment for the earnest money deposit. And so you're not having to do this over, phone or email and send over like a list of wire instructions to send into the account. Everything would get handled digitally. And then somebody would receive this email. It'd be a co-branded email, something like this. And they could see the details of what their earnest money deposit looks like and who those funds are going to be going to. And, there's usually some form of an identity process that people go through to check that they are the person that should be sending these funds and where they're going. And then once they get all of that set up, they can link their account that they'll be using to send off the funds. And once those funds once their bank account's linked, they can go ahead and click that button to pay. And so this process could take somewhere around, 5 to 10 minutes, and you don't have to call your bank or anything like that to initiate the wires. There's not all of this back and forth over emails. Everything's just handled, pretty much over any mobile or laptop device that you wanted to send funds over. And so that's kind of where, these ACH and RTP transactions have a lot more advantages, because they can be transformed into these digital spaces. And so that's what we mean by digital payments. So what are the benefits of using some of these digital payments? For one, they're definitely more cost effective. The fees are significantly cheaper from a wire. For Glacier, for example, we charge about $15 for an EMD, which and it's only one way, versus for, a wire, there's the $25 to $45 on the inbound and the outbound. with the process that these third-party processors like ourselves that are using, there is pullback protection on these ACHs, so you don't have to worry about those funds being taken out of the trust account. The third-party processor takes on that liability and the transaction can still go on. There's banking level security that goes on here. So pretty much everything follows NACHA guidelines, which just puts it up a level in terms of security. And there's also ID verification. The client experience is enhanced significantly because you're not working with your bank or just being subjected to really inconvenient processes to send funds. Everything can just, like I said, be handled over a mobile device. And that experience is just a lot easier for the agents, for the buyer, and for the escrow person that are all involved in the transaction. Another piece of this is the notifications and receipts. This creates a lot more transparency in the digital flows. People are notified when payments are initiated and when they're deposited, and the people that are involved in the transaction can all be notified when these events take place. And so with wires, like there's really no way to control that because it's handled by the bank, and same thing with checks. And so by using these digital flows, we can enhance them. And so that way you're not constantly communicating with your agents back and forth about, oh, did this payment arrive in the escrow trust account? You'll just get that notification when it does arrive, or you can check the status of it and see if it's already been deposited or if it's still in progress. And then, like I said before, there's no banking info exposure. So account and routing numbers in this system aren't exposed. And that helps reduce the risk of fraud because you can just tell your clients, if anyone is telling you to send money to an account and routing number, then that person is a fraud. You're supposed to be using this type of system. There's definitely a lot of other use cases, like this one for RTP, where you're getting disbursements out of an escrow account. So this is a use case of RTP where it's kind of a mix of ACH and RTP, where the escrow holder can send out of their escrow trust account to send off commissions to a brokerage. And these can get sent in 0 to 1 days very quickly from the RTP system to get over to the brokerage, just so that they can take advantage of digital workflows, but also the speed of the RTP transaction. And there's a whole list of other applications that can be used with these technologies. Like you could think about direct deposits for agent commissions from the brokerages, or even passing it all the way from escrow to the brokerage through a digital payment system. Same thing with 1031 exchange disbursements from escrow. You can send those funds immediately after the transaction to a 1031 exchange account. Lease commission payouts, so talking about landlords paying out agents after they help lease out a building. Real-time rental payments, so like if you're very close on being late for your rent, being able to use RTP to pay your landlord, or even like mortgage payoffs where escrow can basically send off money back to the mortgage company to pay off a loan. So pretty much any payment that you can think of in real estate that's being used over a wire or check, there's an opportunity here to digitize those payment flows to make them more simple, more fast, more secure, and just really an overall better experience for people if they're using digital payments. And so, the question is, why haven't these methods been used until now? So the first thing here is, we talked about this a little bit, but these limits weren't really increased until, about April 2022 of this year. And so, 92% of real estate transactions on the residential side are actually under $1 million. And so now that the limits are up to 1 million, we're covering 92% of transactions with ACH. But before that, it was only up to 100,000. And so most real estate transactions just weren't able to be covered by ACH or RTP. And so that opportunity is here now. In terms of reversibility, there's a lot of stigma around ACH that it could be pulled back. And so these third-party processors that, like us, that just didn't exist before, weren't able to stop the reversibility essentially. And now that can be stopped. And then, these same day and next day ACH windows are also relatively new to ACH. And so the stigma in the industry was that ACH always took too long to be used as a real estate payment. And the constraints of RTP have really just been that it's very new. A lot of people just don't know about it. So people haven't taken the time to think about how these can be used, as well as the lack of infrastructure to accommodate these things. There's just a lot of banks that don't have or that aren't on the RTP network yet. And so moving money through the RTP network can just be difficult when, like certain people in the transaction don't have RTP yet. And so talking about just kind of the limitations of these two payments, they're not perfect either. Like I said, there is a lack of infrastructure to support like RTP transactions, which we just kind of went into. And in terms of ACH, a lot of banks have policies essentially blocking inbound and outbound blocks. And so, or like essentially just blocking those ACHs from coming in or going out of an account. And that's just because, again, they think it's a risk that there could be a potential pullback that doesn't technically exist anymore, but they don't really know that. And so trying to communicate these things with your bank can be a little bit difficult. And then with regulators from state to state, there's this thing called good funds law that basically tells escrow title companies and a lot of different other real estate parties of how they can move funds for real estate transactions in their state and what's actually considered good funds. And typically what's listed on here is wires and checks. But these digital payments right now are a little bit in the gray area for some states. And so you have to check with your local regulator to see if you can actually move money using these payment rails in your state. And I think that in the future that it's going to be like legislation is going to keep getting pushed in a way that good funds law will accept these forms of payments. But as of now, like I said, there's a lot of states that are still in the gray about digital payments. So when can we really expect digital payments to kind of be the norm? It's hard to tell, but we do feel like there is a very strong trend towards this. There's a lot of companies that are getting into this space to start moving money digitally. And if you just think about the natural progression of things of, how as consumers, we used to just use, cash and checks at one point, and we've eventually moved into things like Apple Pay and using Venmo or just any other way that you send payments today. The same thing is applicable to real estate or any B2B type of payments. And it's just going to take time and a lot of usage and adoption. But over time, these things actually can start to come into play over the next few years. And that's kind of when we expect digital payments to start taking off in the real estate industry. So that pretty much wraps it up for me about talking about digital payments. I'd love to open this up to Q&A to see if anybody has any questions. So I'm going to close out this presentation here. We do have these links here. This is our website if you guys are interested in kind of taking a look at what we have to offer, as well as our socials. So let me open up the Q&A here. So the question here from Steven, I don't know if I'm supposed to say names, so we'll just call him Steven. So one thing he said he's wondering about is notifying parties in a transaction. Today, it's a really big hassle to know when the funds come in, and then I need to let others in the transaction know with digital payments. Is that easier? So essentially what he's asking, is it easier in a digital payments form to notify parties about what's happening in a transaction? We briefly went over this in the deck, but essentially with digital payments, because of the way that it's set up, you are able to notify parties like when the transactions are actually initiated and when they're deposited. Unlike I said, when you're working directly with just a bank, like if they're not providing you with those notifications, you have no control over that. And so that's kind of how we've made it a little bit easier to notify parties, because you can add in those people into the interface. Whereas like with a bank, like you can't invite your real estate agent or your lender. The only people that can look at it are people that have access to that bank account. Another person in the chat just said, do you think paper checks will ever completely be replaced by digital payments? I personally think that, I've actually been at a conference called Alta One this week, and I was talking to somebody in Michigan in a very small town, and they said that the reason that they use checks is because they are able to walk across the street to knock on the people's doors that are involved in the transactions. And so I think that in some places where it's just really like, it just doesn't make sense to adopt new technology because everything in their life is very simplistic. Some places digital payments just aren't going to apply, just like there are still places that exist that people use cash. to basically pay for things instead of using their credit or their debit card, even though there's tons of benefits to using those things. So I don't think it would ever be completely replaced, but I do think that digital payments will become the predominantly used form of payment for real estate going forward. And I hope that answers your question. I got another question in here. It says, do the lenders that I work with require deposit receipts when funds are moved? Do digital systems like this create those receipts? So with wires, there is like a wire statement that'll come with that wire, so you can see the associated payment that was involved. And so a lot of lenders use that to kind of understand like who the person that sent this payment in. It's really easy to identify who that person is. And so essentially with our system, and if you remember on the other slide, I didn't actually mention this, but the way that ACHs are batched, it kind of makes them hard to identify. But because it's involved within a digital payment system, we are actually able to identify who was involved in that transaction. So the third-party system that is basically doing the debits and credits for the ACHs can create digital receipts that are similar to the ones that are given by wires, but they're just created by us, the third-party provider. So you will have that information for your lender, that what they need. It'll just come from a different source than the bank. So hopefully, yeah, again, that answers your question. Another person said, what led to the ACH limit increase? Really, it's just the progression of the network. They always wanted to increase the limits. So really, it's just like, I don't have the exact answer of like what their motivations or how they got it increased, but the motivation is there to always increase the limits to increase the availability of ACHs to more types of transactions. I think a lot of it has to do with just making sure that there's not a lot of fraudulent activity happening. And so they put in safeguards like limits to make sure that, people aren't sending a lot of big amounts of money over this network that are very fraudulent. And so I think they've done a risk assessment of some sort to understand that, raising the limits up to $1 million still doesn't create additional or much additional fraud risk for them for money moving through their system. Another question we have in here is, how would a company get started with a system like this? Like I said, there's a few different companies out there that are offering digital payments, and you can kind of look those up. For ours specifically, you can just go to our webpage, and there's a get started button on there, and you can kind of select which type of person that you are in a transaction. For the most part, we're mostly working with like escrow, title, settlement related companies. And you just essentially you submit it, we'll verify like what your entity is. The process takes, depending on how fast you go through it, it can be done in about 3 days. It could take up to potentially, just however long it takes you to link your bank account and verify your entity. But just to abide by NACHA guidelines, there is a verification process that the companies are subjected to send money. But once they're set up, it's very easy to get started to start creating payment requests or moving money in the system. And with that, it looks like if we have any more questions, we have time for one more. If not, I'm very happy to just end this call here. Let's see here. I got one more question coming in. So I mentioned that RTP is 24/7, 365. That means my company could allow buyers to send in EMDs on the weekends. So I guess to clarify here, the way that it works is that the person that's like sending and receiving the RTP has to have RTP in order for it to be sent over the weekends. But realistically, yes, you could send in EMD over the weekend if that account does have RTP enabled. The way that our disbursement systems work, because you're sending an ACH into an RTP, like you can't get that disbursement in real time. And that's just kind of the limitations of the bank right now. But once kind of all the banks are on the RTP network, you should be able to send RTPs over the weekends or on holidays, pretty much any time, especially for buyers, EMDs. Alrighty, so that wraps up the Q&A. I really appreciate you guys all hopping on and taking the time to learn a little bit more about digital payments. Contact info is here on the webinar here, but my email is also jonas@glacierflow.app if you wanted to message me personally. Until next time, I appreciate you guys hopping on. Thank you all. Bye-bye.